What's up, everybody? Welcome back. Today is February 19th, 2025. We're going to recap a little trade from this AM session. Not going to lie, today was pretty cooked, but there were a few good setups working. I think one of the main issues that a lot of people have when trading is top-down analysis and then finding their entry and making sure that the entry lines up with the higher time frames. So I'm just going to show you what I did today just to help some of you guys out with this process. We're going to break it down. All right. So first things first, we always want to start the day by going into the 4 hour. I'm actually going to go into replay mode just so I could go back to the beginning of today. So today, go right at 9:30. So right when the market opened, we were looking at the 4 hour first to get some top down and find our bias for the day. So overnight, we sort of ran through, but then re-respected this bearish fair value gap. We ran through this 4 hour fair value gap as an inverse. And then we ran through this lower one as an inverse. So far we're looking bearish. We dropped to the 1 hour, and not only are we attempting to run through this guy right here on the 9 a.m. candle, but we are also respecting this bearish fair value gap. So overall, these higher time frames are screaming bearish. Let's go on the 15. We form this little guy right here, this 15-minute respect, and that is where we open up. So now let's go on the 1 minute. Now, it is a rule of mine that I don't take a trade until at least 9:45, but it is clear that we want to go down. Now, when we're talking downside, what is a possible target? Well, first thing that comes to mind would be this 4 hour bullish fair value gap. Remember, when we're thinking of targets, we're thinking of things that you would see an opposite reaction to. So when we opened up, we had not hit this 4 hour yet. So we're just going to skip. So we keep on skipping and skipping, and now we are at 9:45. So one thing that I wanted to see was a continuation to the downside. And the first thing that I noticed was that we opened up this 3-minute fair value gap that we were starting to respect. Now, if you look at the 5-minute time frame, we didn't have anything. So if you're looking for a respect or an inverse model, you always want to use the highest time frame between 1, 2, 3, and 5 that has something there. So not only did we have a change in the state of delivery right here, as my indicator states, but we also had a respect of this 3-minute and an internal liquidity sweep. So we swept this high. We are respecting everything that we inversed. We are following our bias. We are going towards our draw, which is this 4 hour. We made a fair value gap and we respected it. So first thing you're going to do is get your take profit and put it at right there. And then your stop could be anywhere. We usually do a close above the fair value gap. So that's what it looked like. Get in the sell. Stop loss above the fair value gap. Take profit at this 4 hour entry. We come down and we hit it in the first candle of 3 minutes. So just to review, this is kind of inspired by Justin Moorline's Forever model, because we are using top-down analysis. We are following the line of our bias going towards the draw, that bullish 4 hour. So not only did we have that following all these inverses, we had that liquidity sweep, so we're definitely bearish. We had this 3-minute bearish open up that we respected beautifully. Change in state of delivery, so now we have confirmation of bearish momentum, and we get that entry off that close, and it comes to there beautifully. So today was a pretty messy day price action wise, but remember that the market is always trying to seek out liquidity and rebalance inefficiencies. So if you do that, you find a nice lower time frame model that agrees with your higher time frame, you're still going to win trades almost all the time. All right, see ya.